in previous episodes. So I guess that's kind of our topic of the day: is how do you find these reversals in the market? What's kind of the strategy? What's the logic? Where do you want to begin with that?
Well, first, a quick review for folks. So, we had set up what we call these linear regression, not linear regression, but these retracement zones where they're based on the previous move from bottom to top. So, now based on that net move, we can come up with these zones that help us understand what's going to happen next. And it's based on identifying these bottom and top reversals. So the question is have we seen a reversal and where will that reversal occur? And a lot of people think this week was an up week, and it is an up week, but we haven't confirmed a reversal. So I wanted to share with people in our kind of topic of the day, how do we determine if we actually have seen a reversal in the broad market? Now, number one, I like to look at the S&P 500 index. I feel like that particular index represents at least my watch list the best, but I actually think it represents the overall market the best, just because you look at the Dow is just a certain number of securities. And the Dow, in my mind, is, if you think about a comparison with like what's the monarchy in England, right? The Dow is like the king or the queen of England, whereas the S&P 500 is more like the prime minister, like the Tony Blairs or the David Camerons, right? The Margaret Thatchers, right? It's the one that actually is the more representative of the people, not the monarchy. So that's why I like to use the S&P 500 index. And as far as determining a reversal, I like to use a lagging indicator, meaning that yes, it's going to be delayed in telling you when the reversal has happened, but it removes a lot of that ambiguity. I'd never want to use a leading indicator, which kind of forecasts and hope that it's telling you. That would be like an overbought, oversold indicator, like the stochastics or the RSI or the Williams percent R. Instead, I'm using just a simple moving average crossing. I'm using an exponential moving average crossing, which is a simple indicator. And in my case, I use the 3 and the 5-day exponential moving average crossing. And if you go to my website, you can download this indicator. It's free, and it's for this Thinkorswim platform. And if you take a look here, it's this one right here, confirming indicator moving average. And so you can see I've got it set. And if you want to use different values than the 3 and 5 exponential, you can totally do that. In fact, I've given you a lot of flexibility. You could even calculate this moving average on different prices than just the close, the most traditional close. You could use, for instance, high-low close divided by 3, which would take into consideration daily volatility. You can use volume weighted average price, which is a common. In my case, I'm using close, 3 exponential, 5 exponential, and I'm turning on these filters, and I even turn on the actual lines so I can see the crossing. These filters make sure that the crossing that we're seeing is a tried and true crossing versus just a kind of lackadaisical crossing. So if we take a look closely at the price action that we've seen in just the last week, you can see we have gotten a 3 and 5-day crossing, but it sure hasn't been a confident crossing, right? A confident crossing would be one that really just deviates. Maybe today we'll get that confident crossing, but it's that confident crossing. So I don't want to see a crossing that then comes back in just a day or two. I don't want to see a crossing that just has, basically loiters around each other. I want to see a real crossing of that 3 and 5. And if I get that crossing of the 3 and 5, and to differentiate, it would be the 3 going above the 5 to identify a bottom, and it would be the 3 going down below the 5 to identify a top. So we're looking for a bottom here, and if I find it, if I get that confirmation that this lagging indicator would confirm it, I would basically go back from that confirmation and find the lowest close in the case of a bottom, and I've already got it marked here. That would be April 19th, or the highest close in in the case of a top. So I'm actually waiting to see if this confirmation becomes confident, like it becomes a real crossing and doesn't just kind of spend some time loitering around each other and then comes back down. And in that case, I would go ahead and identify April 19th as my bottom. So April 19th is not the confirmed bottom yet. You can see in my bigger charts that the ones that are confirmed, I mark with the white lines, whereas the yellow line is still fluid. It's still going. And so when I get that full on confirmation, which may come today, it may come this week, or if we decide to start trading down again, then we'll wait to see where that lowest bottom is. But depending on which zone it is, SIP, that'll tell us a lot about what's going to happen next. But that's how I determine if there's a top or a bottom that has formed in the broad market.